Hello everyone, I'm Marcus from MiloX News. Imagine being able to navigate the complex world of tech stocks with ease, making informed decisions based on solid analysis. Have you ever wondered if Nvidia's impressive growth is sustainable or just another hype cycle? Nvidia, a leading player in the AI industry, has seen a year-to-date increase of 198%. But what's happening behind the scenes? Welcome to MiloX News, where we break down complex tech trends and investments for you. In this video, we're diving deep into Nvidia, a company at the forefront of the AI revolution. We'll be looking at their performance, insider trading, and future prospects. By the end of this video, you'll have a comprehensive understanding of Nvidia's position in the market, and you'll be equipped with the knowledge to make informed decisions about tech investments. So, whether you're a beginner or an advanced investor, stick with us as we unravel the intricacies of Nvidia's growth story. Nvidia, a company that has experienced impressive growth, with a year-to-date increase of 198%. The explosion of artificial intelligence AI has generated a lot of excitement, and Nvidia is at the center of it all. But is this growth sustainable? Or are we seeing another hype cycle like internet computers in the 80s, real estate in 2005, electric vehicles a few years ago, and cannabis a little before that? Each time a new trend emerges, people get excited and say, this one is different. But is it really different this time? In this video, I'm not going to tell you that Nvidia is a bubble about to burst. Instead, I want to teach you how to analyze an investment. Every investment is the present value of all future cash flows. When you buy a stock, you're buying a piece of a business. So, whether you're a beginner or advanced investor, stick with us as we break down Nvidia from basic to advanced levels. Nvidia has had an impressive performance this year, with a year-to-date increase of 198.5%. But what's going on behind the scenes? Are insiders selling their shares? In June, we saw that 350,000 shares were sold at an average price of around $400. That's $140 million just in June. Some of these sales represent a significant portion of the total holdings of insiders. For example, Joan Harvey Jones sold about a fifth of her total shares. Now, people sell shares for many reasons, and it's not always a signal that something is wrong. But it's interesting that sales seem to have accelerated recently. In the last 3 months, more shares have been sold than in the last 12 months. On the other hand, share purchases have decreased. In the last 3 months, 6,000 shares have been purchased, compared to 900,000 shares purchased in the last 12 months. This could be a signal that insiders do not expect the stock price to rise much more. But what about AI? Is it just a fad, or is it the future? I believe AI is going to be a big part of the future. AI has improved a lot over time, and I believe it will continue to improve. But just like with the internet, although the technology itself may be revolutionary, that doesn't mean that all companies involved in it will succeed. Many internet companies failed, and many tech companies that were at their peak in 2000 have still not surpassed their peak from then. So, what does this all mean for Nvidia? Well, first, let's take a look at some fundamentals. Nvidia has a market cap of $1.05 trillion. That's trillion with a D. In comparison, its enterprise value is $1.06 trillion. That small difference is essentially due to their debt, which is very, very low. However, they have a current P/E of 195 and a 5-year P/E of 199. Is that sustainable? Well, Tesla and Amazon have shown that it can be. But in the long run, stocks are a weighing machine, not a voting machine. And that's an important part of the weight. Nvidia has a great 5-year return on invested capital, which means they get a great return on the investments they make in the business. But again, if it were as simple as buying the companies with the highest return on invested capital, you would simply list the companies, order them by return on invested capital, and buy all the ones at the top. At the end of the day, if you pay too much, even for a company with a good return on invested capital, you could end up losing money. Now, let's take a look at some analyst estimates. Earnings per share growth is expected to be around 30% over the next 5 years. That's impressive. But at a current price of $420, that means Nvidia is selling at a P/E of 35 in 2028. That's pretty high. On the revenue side, huge growth is expected, almost tripling revenue in 5 years. The bet on AI is very high right now. But remember, We've seen this kind of hype before. Electric vehicles, cannabis, even cryptocurrencies have gone through cycles of hype and crash. And although AI has great potential, that doesn't mean that all companies involved in it will succeed. So, what's a reasonable price to pay for Nvidia? Well, that depends on your assumptions about revenue growth, profit margin, free cash flow margin, and the multiple you're willing to pay. If you believe Nvidia can achieve 30% revenue growth over the next decade, a 32% profit margin, and a P/E of 30, and you're willing to accept a 17% return, then you might be willing to pay up to $590 per share. But that's a big if. In summary, Nvidia is an impressive company with great potential. But, as always, it's important to do your own research and understand what you're buying. Don't get carried away by the hype. Instead, look at the fundamentals and make an informed decision. I hope you enjoyed this analysis of Nvidia. If you liked this video, please give it a like and subscribe to our channel for more analyses like this. And, as always, we'd love to hear your opinions in the comment section. What do you think of Nvidia? Do you believe their growth is sustainable? Are you considering investing in Nvidia? We'd love to hear from you. Remember, investing always carries risks, and it's important to do your own research and consider your own financial circumstances before making any investment decision. Here at MiloX News, we're here to provide analysis and insights, but at the end of the day, the decision is yours. Thank you for spending your time with us today. If you find value in our videos, please give it a like and share with your friends and family who might also be interested in this kind of content. And if you haven't subscribed to our channel yet, please do so and turn on notifications so you don't miss any of our future videos. I hope you enjoyed the video and got some useful insights. As always, we're here to help you navigate the world of investing, so don't hesitate to leave us your questions and comments. And before I sign off, I remind you once again to give this video a like, subscribe to our channel, and leave your comments. Your support means a lot to us and helps us continue producing quality content for you. I'm Marcus, your host at MiloX News, and I look forward to seeing you in our next video. Until next time.